All eyes on base. Tune in. Press play. All this alpha on the way. Don't blink. Just stay. Oh, yeah. Got my coffee and my tabs up. Charts on the screen trying to level up. Base junkie breaking down that A-Prepper. Crypto now we're turning threads into similar. What's a pool, what's a yield, what's a peg mean? They turn the jargon into real life scenes. From airdrop dreams to blue chip streams, they map it all out, now we all on the team. From what is gas, so check my stats. From I don't get to run that bag. All eyes on base. Stay locked in. Learning Defi while the beats stay bumping. Oh yeah. From the first little back to a major move. Base junkie, now we got something to prove. Get your notes right. Turn that late night scroll to a smart life guide. We just press play, let the questions fly. They explain that yield while the numbers climb high. Click connect, now I see the pool flow. Two-side deposit, watch the tokens grow. LP tokens in my wallet, feeling brand new. Fees dripping in while I'm chilling with the crew. Talking risk and permanent. What that do? They slow it down till the smoke shine through. From rug red flags to the gems in the rough, they keep it real clear so the fans stay up.
Yo! And welcome to this week's edition of All Eyes on Base, the Base DeFi show where we talk about yields and the latest and greatest things happening here on Base. Today we're going to be talking about the hidden AI agent economy. I'm looking forward to it. But as always, these shows would not be possible without my wonderful co-host, Mr. Crypto Noah. How are you today, my friend?
Dude, I'm really good for a couple of reasons. One, episode 26 right here. Two, I just booked my flight to Portugal, so I'm gonna be seeing in a little over 24 hours. I got a long travel day. I got to fly into Zurich, Switzerland, and then over to Portugal. So if you guys are gonna be in ECC, come see me. Then for the moment we all been waiting for, the merch. So this says World Tour Meme Coin Anniversary. I actually got this at NFC Lisbon. And I'll be in Portugal. It's not Lisbon. You can see it says Lisbon on this side. Yeah, there it is. It's cut pretty weird, man. I don't know if Europeans have like slim lats, but it's like when I do a lat spread, I feel like the shirt's about to bust. But cool shirt nonetheless.
Man, it's just you're like flexing those guns.
Yeah, being cut, I guess, and I don't know. But anyway, how you doing, man?
Man, I'm doing good. Excited that you're going to come to Portugal. That's awesome. Looking forward to. I mean, tomorrow, in fact, on Friday is the 2-year anniversary of the Algarve Blockchain Society. That's actually where we met last year, right?
Yeah, last May, June.
Last May, man.
Yep.
Yeah, dude. Yeah. In fact, it was because I think it was just after the NFC. In fact, so it must have been like June, July.
I met at NFC Lisbon. I gave a DeFi chat, and she came up to me, and she's like, "Oh, you should do like a presentation for my community." And we were like, "Okay, well, we're already going to the Binnacle Caves." So we came down there, pulled up in Faro, and yeah.
And dude, I mean, literally, I didn't go to like all the events, but like that one, I was just like, yeah, you know what? Why not? Like they keep like pinging me, like, hey, do you want to come? And then I was like, yeah, you know what? For some reason, stars aligned that, and then we've been making magic ever since.
Serendipity.
That's it.
Yep. So.
Well, yeah. Dude, pumped that you're coming over. That's awesome. Kudos to the blockchain committee for getting to 2 years. I mean, this whole space moving at 1,000,000 miles an hour. But yeah, man, it's an interesting time in crypto. As always, it's all about AI agents and what's happening at like at the macro level. So Definitely interested in your takes for today's topic.
Yes, sir. Yeah, I'm just pulling up some pictures here because, dude, if you guys weren't bullish on Tibber, sorry for the spoiler alert, then you're gonna be bullish after this because I'm just gonna get into it. And I also, guys, Chads, what's up, Bill? I'm writing a Substack article on this, so I'm just giving you guys the spark notes of the article that I'm writing. And I was planning on posting it today, but now I got to pack and cut my hair and get ready to fly out of here at 8. It's 2, and I got to get on a call right after this. I still haven't even eaten today, so yeah, it's a crazy day. So let me pull up my notes here, and I'm gonna just enlighten you guys because this stuff's crazy. All right, so here we go. Like Base Junkie said, this is the hidden architecture of the agent economy, and this is what everyone missed. And bro, me and you, we missed it, but not at the same time. All right, so it's like I'm gonna show you guys this because once you see it, it's like you can't unsee it. It's a connection map formed between Coinbase, Ribbit Capital, Virtuals Protocol, and the Ethereum Foundation. And it all points to one thing, and that's the infrastructure for an entirely new economy for AI agents, right? An economy ran by AI agents, and most people missed it, right? They got to set the internet up so that agents can use it and not just people. And we kind of already talked about that on a previous episode. So let's talk about the full connection map, right? So Ribbit Capital, just to give you guys refresh you guys this memory. And I made a fundamental deep dive on Tibber. And there was another good one that we recommended a few shows ago that's more current. Definitely watch that one. I would definitely say actually watch that one over mine because it's more current. But Ribbit Capital is Coinbase's earliest investor, right? And they manage $12 billion in assets. They quietly launched a token called Tibber in last January. Base Junkie invested into it super early, but then got out. And then now we're back in there like swimwear.
Paper hands, salad fingers.
Right. But they launched this token not loudly with no hype, just a stealth, right? And they launched it on the Virtuals Protocol, which is built on Coinbase's chain, right? And the focus is agentic trust and know your agent, like KYA. So instead of KYC, know your customer, know your agent. So now let's track what happens next. In May of 2025, Coinbase launched X402. And we talked about that on a previous episode. And it's like it's a payment system designed specifically for AI agents and allow people to move money natively over the internet within, I think, HTTP, right? So in August, Eric Rappel from Coinbase co-authored ERC 8004, and this is the identity trust layer for agents. And then in March 2026, Virtuals Protocol authors ERC 8183 with the Ethereum Foundation, which is the commerce layer for agents, right? So now you have payments, identity, and commerce all being built in sequence, okay? So now let's look at the ecosystem build out, Ribbit's investments. So while all this is happening, Ribbit Capital, they're not just watching, they're quiet. They never denied anything, but they're investing across the entire stack, right? They're back in Coinbase, building payments and wallets, Privy, building wallet infrastructure, Crossmint, connecting fiat to crypto for agents, Persona, focused on identity verification, Tempo, Stripe's blockchain, working on machine payments, and Lightspark, enabling Lightning payments. Guys, this isn't random. It's all connected, and it's a coordinated exposure to every layer of an emerging system, all right? So now I want to talk about the misdirection and what we kind of missed, right? And this has to do with Zora, right? So it kind of gets interesting because like while all this was being built quietly, all these things that we talked about, because Ribbit Capital, they got billions of dollars. They could have easily been marketing all this stuff, but they're not. Coinbase's public strategy looked completely different. They were pushing Zora like no tomorrow. And me and Base Junkie were drunk off the Kool-Aid for a few months there, right? Content coin, SocialFi, coin everything, right? They embedded it into the base app. They ran campaigns. They drove engagement, kept attention focused on social tokens. While everyone was watching content coins, the real infrastructure was being built underneath, right? And not being marketed. And even on Zora, you know, they kind of went quiet for a while. Like we kind of talked about the issues, so I'm not going to super get into that. But they kind of found out that it wasn't even mostly creators on Zora. It was mostly traders, right? And I opened up Zora yesterday. They did just launch like this whole themes to where if you trade like different themes or not themes, I forget what they're calling it. I don't know if you checked Zora lately. Let me just pull it open.
No, dude, like literally, it's so far in the rearview mirror now.
Yeah. What are they calling it? Trends. The
Trends,
number
yeah.
one trend is aliens, and the market cap for all 238 of those posts, 17K, 17,000. So it's like virtuals. I mean, not virtuals. Zora.
Yeah.
I kind of feel like, man, that was like a decoy. Like they wanted people to look at that. They didn't want people to really look at what was really going on.
Sorry, but when you say like they wanted us to be
Coinbase.
You think Coinbase is, like doing the misdirection?
I think so, man. Because like, why wouldn't they be marketing all this other stuff, putting all the money behind this other stuff? And keep in mind, Jesse's running Base. He could have been talking about this too. This stuff is still happening on Base, but they weren't. And it's way more money that's going into this stuff, right? So it's just like, why wasn't it being marketed? Especially with how hot AI is, man. They would have so many more eyeballs on it. So
yeah.
Anyway, so then let's look at virtuals. And this is another thing, right? So virtuals launched in October 2024. And by January 2025, it hit over a $4.5 billion market cap. It was the biggest AI crypto project on Base. But guess what? Coinbase didn't list it. Other exchanges did, Binance, Bybit, OKX, Kraken, but Coinbase waited 8 to 9 months. Dude, Coinbase has listed so many projects with smaller market caps. This is the biggest AI project on Base, and AI is the hottest theme, and they didn't list it. And they make money off of it. Why? I think the typical answer is either compliance or delays, but there was other AI projects already listed. So it makes me think it wasn't compliance, but there's another possibility.
Well, I mean, like, yeah, I have some like talking to people. I think like the sentiment for like it not being listed was typically like maybe like they're not invested enough. Like people were sort of, I mean, this is slight like FUD, but it's like why why wasn't virtuals listed at its hype? I think eventually it was listed like well after like it was the opportunity to capitalize, but like strike while the iron's hot, and it was a major frustration point. But if you have an alternative reason as to why, I didn't mean to cut you off there.
No, you're good, man. It's all good. We're having a conversation here. It's like I think listing it early would have drawn massive attention to the AI agent ecosystem on Base before the infrastructure was ready. So I think instead they waited, and they waited a while, right? So then I want to talk about Ribbit's. I want to zoom out and talk about Ribbit Capital's token revolution thesis. So in June 2024, Ribbit sent a 41-page letter to investors, not about a fundraise, not about an IPO, but other tokens. And their thesis was every business becomes a token factory. Data and money merge, and AI agents become economic actors. They introduced the idea of agentic commerce, where agents hold funds, make decisions, and transact autonomously. And here's the key prediction. Like we said in the beginning, know your agent, KYA, will be just as important as KYC. So whoever builds that trust layer could capture trillions in value. So they were priming us, right? So now let's look at the architecture, the 3-layer stack. And this is where everything clicks, right? So it's just like while Zora was generating all this noise, there was this 3-layer stack being built no one was talking about, or talking about vaguely. Layer 1, payments, X402. This is how agents pay, built by Coinbase. They already processed over 100 million transactions. They integrated with Stripe, Visa, AWS, Google Cloud, Anthropic, and Cloudflare. That's crazy. They're not talking about this, man. These are the biggest companies in tech. This is the payment rails. So then you got layer 2, identity, ERC 8004. This is identity and reputation, and it gives every agent an on-chain identity, a reputation system, a validation layer. So this is KYA, know your agent, not just who they are, but whether they can be trusted, right? And then the final one, layer 3, commerce, ERC 8183. This is how agents transact, right? It's an escrow-based system. Hire, deliver, settle. So two agents who've never met can exchange value safely with an evaluator ensuring fairness. And that evaluator can be another AI agent, a smart contract, or even a DAO, right? So if you simplify it, X402 is how you pay, ERC 8004, who you're dealing with, ERC 8183, how you transact safely. That's a full operating system for the machine economy, guys. Like that's everything you need, right? And just going back to key players across all three layers, the same names keep appearing: Coinbase, Ethereum Foundation, and Virtuals. And speaking of Virtuals, let's kind of bring it back to Tibber here. Remember, they're still in stealth, built on Virtuals on Base by Coinbase's earliest backer. And all the breadcrumbs are on chain. Like I said, go and watch the videos. They focused on one thing: agentic trust. And this is exactly the layer Ribbit says will be worth trillions, right? So now I want to look at I want to pull up some holder data really quick here. Airdrop this to myself really quick. Okay. Let me share my. You feel free to say something if you want.
So, I mean, I see we have a question from Bill. If
What's up?
So put it up on the screen. So no, question for you when you get a chance. Are you more bullish on Virtuals or Banker going forward if you had to choose one?
Virtuals, 1 billion%.
Oh, wow.
I'm a platform guy, and I don't super keep up to date with what Banker's doing as well. So part of it could be naivete, however you say it. But platforms historically are always the best investments because like it's what things get built on top of. Like Google is the best search engine platform. Facebook's the best advertising platform. Apple, they built their app store. That's a platform. Amazon, the best e-commerce platform. Ethereum, and these layer ones are the best investments in crypto because smart contract platforms get built on top of them. So anytime there's a platform play, Virtuals, AI agents to be built on top of it, I'm definitely going to go with the platform. 100%.
I mean, I would say like Banker has become a bit of a platform play. Yeah. So I see Bill saying
yeah, like I said, it could be naivety because last I heard, I know they were like doing like helping you to do like trading and stuff. Like I haven't looked into it deep, so it could.
I mean, so Banker really has like evolved and like seems to be like at like the tip of the spear in terms of this whole like agents revolution and finding out ways that they can like pay for themselves, pay for their own credits and their own existence. It seems like a very interesting model and it's getting a lot of traction. For me, I don't really see too many headlines with Virtuals. I'm not really sure why it's not more in the spotlight. But the fact that Tibber launched on Virtuals, and I think Tibber is going to be the unicorn of this cycle, and like the fact that you're mentioning all this stuff, like
this is the Spark notes too, man. If you
absolutely,
well, it's like this is only 10%. So, over this really quick. Or did you want to say anything else to that? I didn't mean to cut you off.
No, just reading Bill's last comment on what else Bank is doing. They also launch agents and take % of every transaction from them.
I'm gonna read more into Banker and then come on next week, Bill, and maybe my answer will be different. I always will acknowledge if I'm naive somewhere, and this is definitely one of those. So I don't know too much about Banker, so when I have more information, I'll give you a more educated response.
Oh, mate, like honestly, Banker saved the trenches. Like this year with the rise of AI, it's kind of crazy because Virtuals had the first AI season on Base, and Bankers seem to have really kickstarted the second AI season on Base. So it's going to see, and like obviously one is at many multiples of the other. Bankers under 40 mil market cap. If there are actually to be any sort of comparison, if you even to look at Banker as a beta play, like in terms of catching up in terms of market share, it's an interesting investment opportunity. Obviously, not financial advice, just saying. But let's jump back into the Virtuals and Tibber story.
Yeah, I'm gonna look into it and we'll talk about it again next week. But okay, so I wanted to look at what smart money was doing, right? Because it's all about what's happening on chain, right? So I pulled Tiber's holding data using the Nansen API, not just a sample, but the full set of the top 1,000 wallets. And I broke it down into 4 groups. All the holders, smart money, whales, and exchange wallets. Now, here's what stands out immediately. 86.7% of the, is my screen still sharing?
Mm-hmm.
Okay, let me know if it doesn't. 86.7% of the total supply is concentrated in those top 1,000 wallets. And the behavior across them is pretty strikingly consistent. So at the top, you have 7 mega whales, each holding more than 1.3 million, and they control 14.2% of the supply. And over the past 30 days, 86% of their activity has been holding, right? 14% buying and then 0% selling. Not a single 7-figure wallet has sold anything in a month, even with BTC below 70K, shit, 60K range during peak uncertainty and global tension. They haven't budged. And then you have 175 large whales, right? Positions between 130K and 1.3 million, controlling 44.7% of the supply. Okay. And about 2/3 of them haven't moved at all. And then below that, it's 818 mid-size holders. So between 13K and 130K, they control another 27.9%, showing the same pattern. So overall, 65% of all meaningful holders haven't made a single move in the last 30 days. And this is with the token down 70% from its all-time high in one of the toughest risk environments of the year, right? 2 out of every 3 wallets are simply holding. And I don't think that's not an indifference. That's a holder base that's been through volatility, drawdowns, and macro fear and hasn't shaken out. So now I want to pull up another picture and look at the wallets that are active and see what we can find there. Let me know if my screen stopped sharing.
We can still see it.
Okay, cool. Okay, so now the top one, Master Ventures, they hold 8.08 million Tiber. That's about a $1.05 million position identified by Nansen as a professional fund. Now that's a serious allocation for a $130 million market cap asset, right? So there's also newly created Safe Proxy wallet that built a position of over 1.79 million tokens, and that's more than 700K, jumping straight into the top 30 holders. That's fresh capital entering while the broader market is struggling. So it's just like, meanwhile, the top 2 holders remain completely unchanged. So these multi-million-dollar positions still sitting despite a 70% drawdown from its peak. On the sales side, activity is also minimal. Like one wallet reduced about 1 million tokens, another trimmed roughly 4 million, compared to 175 large wallets where most haven't moved at all. So that selling barely registers, right? It's a drop in the bucket. So the takeaway is pretty clear. Circulating supply is tighter than it looks. Conviction among holders is high, and the actual float available to buy is limited. So at a $130 million market cap with around $4 million in daily volume, any meaningful demand is likely to run into a supply wall of holders that just simply aren't selling, brother. So here, let me close this down. Whoops. Wow, my screen didn't stop sharing for once. That's pretty dope. All right, so now to put a ribbon on this, let's look at the present. As of this week, March 2026, everything is starting to come together and fast, right? And this is any day now. Tiber can go crazy any day now. So you have ERC 8183 submitted just 9 days ago. Tempo, Stripes blockchain, which Ribbit's an investor in, went live 2 days ago. World, Sam Altman's project, rolled out its agent kit 3 days ago. And then on that same day, Visa introduced its own AI agent payment tool. And then just 2 days ago, AWS, Amazon Web Services, released a reference setup for the X402 on Amazon Bedrock, right? So at this point, the agent-driven economy isn't just an idea anymore, is actively being deployed by the largest companies in the world, or in tech, I should say. And much of the infrastructure behind it was quietly built throughout 2025, while most of the attention stayed fixed on content coins and SocialFi. So Ribbit's token factory thesis, the letter they wrote, called this trajectory ahead of time. And so like, it's like the real question is not whether this shift is happening, is who ends up controlling the trust layer that everything depends on. And I think we know what that answer is.
Boom. I mean, the fact that that Ribbit Capital has their fingers in so many pies, and that they have literally been Series 1 or like just seed investors for all these large companies. I mean, like they led the Robinhood raise as well. I mean,
They saved Robinhood's ass with a couple $1 billion overnight too, and they were advising Coinbase on like regulation in their early days as well. And then Coinbase made stand with crypto.
So these guys, yeah, they are really in the thick of it. You know, I think it's, to me, it feels like one of the most asymmetric bets in crypto, because like it's still not confirmed officially. They haven't, so Ribbit Capital hasn't officially acknowledged that Tibber is theirs. And you know, we see this sort of like X factor catalyst for like price movement with other tokens such as, you know, DRB, for example. You know, will Elon acknowledge it? You know, just like something like this, a spark to just set off the fireworks. And that hasn't happened with Tibber. But as Noah was saying before, you know, definitely go check out some YouTube videos. We linked one before. It was a Kyle Chassis. You know, I think it's called something like, you know, is this the next Bitcoin? Obviously, clickbait title, but it dives into all of the breadcrumbs, and it is like all but undeniable. And you know, they're just trying to get their ducks in a row. So I think the fact that there hasn't really been too much spotlighting for those who, unless you've cared to look and like turn over the rocks and see what is actually there, you know, it's easy to have missed, because the headlines, Zora, creates coins, all this stuff, it was like the flashy hot thing. I don't think it was a purposeful misdirection. I just think it was a bit of a swing and a miss, you know, just trying to do that because they had their product out, it was ready, the infrastructure was there. Let's see if we can make this work. Didn't find product market fit, but I'm sure Coinbase knows there's something brewing bigger and bigger and bigger. And once we get the Clarity Act passing, I think that's good. That's probably the last domino to fall for them to say, all right, guys, by the way, the jig is up. Most, like, some of you have seen it. It's true. And now we can acknowledge it. We're building Know Your Agent, and we've built the trust layer for all agents. And I think that's going to be the catalyst to really send it to the next level.
Yeah, and here's another thing, and this is just speculation. In my original video on Tibber, that I talked about how like compliance for companies is just an expense. They have to pay money to make sure people are compliant, and they don't get anything out of that. And Tibber is basically trying to, and this is their whole digital backpack concept, they're trying to turn that into a profitable industry. And so here, let me go deeper. Base Chunky, I'm sure you've signed up with a few bank accounts or a few financial accounts or any kind of account where they have to do KYC on you. The company has to pay for that. I'm sure you've paid, like whenever you run a background check on someone you're hiring, you have to pay for that. Companies have to do the same thing. And if they're getting hella people and those people aren't using it, they have to do that in order to onboard them. So if they get 100 people who sign up, there's not a promise that they're going to use it, or at least use it enough to like cover the background check expenses. So Tibber, with this whole digital backpack concept, you'll be able to take all the info that you use to sign up for a bank, socials, all this stuff, and you'll be able to just submit it there, and the company won't have to pay for it because it's already verified through their digital backpack. That's verified from the companies that's doing all the background checks and the compliance. So here's my theory. With all of the things that they're working on, we talked about these 3 layers. I know that Tibber is going to have some, or I can't say no, I have a strong feeling that Tibber is going to have some kind of crazy utility, including using those 3 layers, fees that get paid. And since it's agents doing it, agents are going to have, they're going to have their own wallets, right? They're going to be paying over X402. I bet you that these agents are going to have to be holding Tibber, and it's going to be a lot of the agents that's buying up the Tibber, and they're probably going to create some kind of burn mechanism to where once the agents using them, they're getting taken out of circulation, and it's going to make Tibber more scarce. But I think the agents is going to be buying a lot of Tibber. I doubt that it's just going to be a coin with no kind of use case.
It tracks, but man, to quote Hawkeye, don't give me hope.
Amen.
I mean, that would be music to all believers' ears. But yeah, I mean, look, anybody who's seen our show, we've 26. We've been doing this for over half a year. Like, we've spoken about Tibber for a long time, to be honest. And if you're in, you're in. Congratulations. If not, do your own research. I appreciate that you're bringing the facts. I mean, for me, the way I see my Tibber stash, it's in a different wallet, so I can't be tempted to trade it.
I'm not none of my Tibber. I don't give a fuck what happens. I'll sell ETH at this point before I sell some Tibber. Just being honest.
Yeah, I loaned my ETH. I borrowed against my ETH to buy Tibber. So I'm trying to have your cake and eat it too. But
I'm mentioning the Ribita, the Tibbers account right now, and base. We forgot to do that again.
Oh fuck, man!
Yeah,
27 episodes in, then we'll get it.
It's all good. But yeah, no, it's yeah, man, the writing's on the wall.
Well, dude, yeah, man. Well, listen, you need to pack, so we need to wrap this up a little bit early. But there's one more thing.
Yeah, one more thing, guys. So I did an experimente. So I'm gonna share my screen with this is the DeFi show, so we always got to show a little DeFi. So look at Odai. I bought the Odai dip today. I don't know if you did, but if we go back to Tibber, what is it at right now? It's been doing that today, man. I have to click it up. See, I clearly clicked Tibber. Let me refresh it. I don't know why it's been doing this. Okay. All right, there we go. I'm about to say 4 cents. What the hell happened? You picked the wrong episode to do this.
Yeah, Tibber 4 cents, and it's time to sell a kidney.
Yeah, for real, sell some plasma or something. Fucking donate some bone marrow. Anyway, so I closed out my super tight range because, man, it was just, that thing was moving way too much. So I'm still in this one, but here is an experiment that I have been trying. So if you go on Revert, you can see it's saying like 92, but it has 0. So what I did was I actually staked it, because if you go on Aerodrome, liquidity, and we look for Tibber, I was like, man, this is interesting. The fee APR says 69%, but the emission APR, and then emission is when they're paying you in Arrow. You don't get any of the trading fees. They keep the trading fees and they pay you out in Arrow. Okay. The emission fee was higher. So I staked it, and I'm like, man, let me see if it's actually worth it. So it actually was. So if I go here, the APR, hold on. I probably have to sign into my wallet, But basically, long story short, you're not gonna get 3,000 unless you're in a super tight range. Like I don't know where that number came from. I'm not getting anywhere close to that, but I am getting a higher APR. Like when I sign into my wallet, it shows the APR and what you get from the emissions, and the emissions was like 200% higher. So I'm gonna keep checking this every day. Like they vote on the emissions every, I think, week or two. So yeah, staking inside your liquidity pool has been better, and it's just like I just been taking my arrow and selling it for ETH, ODI, and Tibber. That's all I'm buying right now. My bags are already packed.
I mean, that's a solid port there. You know, Tibber, ETH, and O'Day. Like
that's all you need.
I can't argue with that. I absolutely can't knock that. Bullish on those three as well. But also, yeah, I've always looked away from the staking it, because I remember before, like way back when we were talking about it, it's like, you know, when you're just providing liquidity, you're stacking your Tibber, you're stacking your ETH, you know, you're getting happy to get a bit of both. But Aerodrome, it's like, is that the one I want to be holding? If the emissions are a lot higher and you can just collect them whenever you want, you're not bound to like a locking period, then actually that makes a lot of sense.
Yep, and I think Aerodrome is up like 7%. So I actually got a little bit more while Tibber was a little bit down. ETH is a little bit up, so it probably balances out. But either way, I think it's higher because the yield is much higher right now, at least. But I'm not staking both of my Tibber pools because, you know, Tibber is like a ticking time bomb in a good way. And whenever it does explode, the one where I have most of the liquidity in, I want to be able to benefit from the impermanent gain and from the trading fees from that one, because I think it will be way higher than the emissions. We just don't know when it's going to be. So now it's kind of like a tranching strategy between staking and not staking. So yeah, I got both the bases covered. So yeah,
man, talking about like Tibber being a ticking time bomb, and obviously, guys, this is not financial advice. Research. This is not sponsored by Tibber. This is just two guys who've done some research.
I am not getting paid by Tibber except from liquidity pools.
But dude, like when you say about like it being a ticking time bomb, like it can go off any time, like to the upside. I remember actually being like not stressed, but I was like, because I had all my entire Tibber ETH position in like just one liquidity pool over Christmas, and I wasn't at the computer, and it was like the range was between like, I think it was like 15 cents and 20, or it was like between 10 and 21 cents, because that was like
USD or Tibber ETH.
I forget, but I remember that the price, maybe USD.
Yeah, if you're going off the Tibber price, it probably was.
Yeah, so I was like, okay, if it goes over 21 cents, I'm fully out. And I remember like one day just like wicked verse like straight up, and I was like, obviously like I had more money because it'd been selling it, but I was just like, shit, have I missed it? Like, is that it? I've got my, like, yeah, like, well, like, hooray, like 30% profit, but is that going to be the start of the journey? And I've just got off on the first station, but thankfully it wasn't. It gave me an entry to get back in and actually just like hold on to some Tibber, and then as you said before correctly, I was getting a bit overexcited, to be honest, to get the to earn from the LPs. But like one thing you said is that to have like in thirds, right? Like a third in LPs, a third in holdings, and then the third.
And so like 10 on market conditions, the stable bag can go between 50 to 10%, but I never go below 10.
That's a
if Tibber wicks down to 2, 3, 4, 5, 6, 7, 8, 9, 10 cents, you want to be able to deploy that. And then once you go to rebalance your portfolio the next month, it goes up and you have to get back to that 10. It forces you to take some profit. So it's always good to have cash for a rainy day.
That's it, man.
And dude, I didn't tell you. You said a European thing today that was fucking funny. You were like, yeah, when you get here, I'll be putting the kids down. Normally in America, when we say putting down, like you say putting down the dog, it's like you're putting it to sleep for good, like killing it.
No, won't be doing that. Not with the kids.
Normally we'll say, oh, we're putting the kids to bed or laying them down. You said putting them down. I was like, oh shit, that's funny, man. Anyway.
All right, dude. Well, listen, yeah, excited to see you tomorrow.
Yep.
IRL. So wait, hang on. So are we doing a show next week, or are you traveling across Europe?
I will be in ECC, or what is it, Con, till probably the 3rd. So let me look at my calendar real quick. Let's see here.
We can play it by ear, but it'd be cool to hang IRL.
Yeah. So if I'm here till the 3rd, so yeah, the 1st, I fly out on the 1st or on the 29th. I get there on the 1st. I could probably still do a show on April 1st.
What is it, man? No stress. If not, I understand how it is traveling and all. But
yeah, TBD, to be determined.
TBD. Maybe we even get some content on Friday night. I got my travel mics. Yeah, we can maybe do something IRL.
I'll be down, bro. We should definitely.
Awesome, dude. Well, look, pleasure as always, and I look forward to seeing you IRL. And a big thank you to everybody who tuned in today. This is episode 26. So if you've enjoyed it, if you learned something, smash retweet, let people know about it.
Hit that QR code. We're doing our 8-week cohort starting April 14th. We're giving away free scholarships. It's a crypto and AI cohort. So we're going to teach you everything to make you a better builder, investor, or make you more competitive to be able to get a job in Web3. You get your certificate at the end. You get homework. Got some cool sponsors. I'm going to be going to get some more sponsors going to ECC. So yeah, looking forward to meeting some of y'all.
Cool. All right, guys. Until next time, stay safe, stay healthy, but most importantly, stay based.
I'm a baseline junkie. I'm a baseline junkie. I'm a baseline junkie. And I like it funky.